Okay. All right. Thank you for tuning in here. So let's see what's going on. Obviously, the big thing is the hurricane down there. I saw someone say today it might be a hurricane category 6, which would be a new definition, which is kind of amazing, frankly. I just hope if you're down there, swallow your pride, get out. You know, dying is probably worse than having your basement flooded. All right. I don't want to sound like a cold Wall Street guy, but let's talk about the market and how this could affect it. But the way I rationalize it is the more money I make trading, the more money I can donate to people that need it. I mean, I need it too, but they probably need it more than I do. It's tragic. All right. Anyway, so I was looking at Carnival Corporation. Obviously, the ocean liner company or whatever you want to call it. And what's pretty interesting here is you can see how when a stock gets to a price level that was resistance before, it can become resistance again. And that's what we're seeing here. And we could also see the mirror image down there. When a stock gets oh come on, Mark. Jeez. When a stock gets to a support level, it can become support again. So the obvious question is why is it that we would get to a resistance level and run into resistance again? And there's a reason for this. It's not say it's psychology. There are people that say that the markets follow a random walk. You can't outtime the market. Those people are wrong. I have known many people over the last 3 decades that have made amazing amounts of money because they can time the market. How do they time the market? They time the market by listening to the market. They let the market tell them what to do. How do they let the market tell them what to do? Well, how does the market act when it gets to a certain price level? All right. Now, if you are, all right, let me take a step back. July of 23 here, right around 1930, 1940, there was resistance. The stock goes down, rallies, in December, we get resistance at the same level. This isn't a coincidence. This is a reflection of trader and investor psychology. There are people who bought back here who regret doing so because as soon as they do, the price goes down. And they tell themselves, "Ah, if it ever gets back to my price, I'm going to sell my shares and get out of break even." So when you get to a former peak, there's a good chance there is going to be resistance because you have remorseful buyers placing sell orders. Now, you don't need to be a former hedge fund trader or market maker or guru to see that. Wow, look at that. This price level has been resistance. So it's because of buyer's remorse. Down here, you have the opposite. The level that was support before can become support again because of seller's remorse. Is the opposite. You have people that sell, the price goes higher, and they're like, what the hell did I do? If I could buy my shares back at break even, I'm going to. So when the stock finally gets back to their sell price, if you have enough remorseful sellers placing buy orders, it creates support. When this market was in a free fall here, I mean, I wasn't in on this trade. I'm not going to say that I was. Um, but I think this is just a good lesson here. You're going into a free fall. You're thinking, I like Carnival. I think this news is overdone. It's over exaggerated. Where should I buy the damn stock? Oh, there was a price level that had been support before. I know because Professor Mark tells me, or has taught me, at least I hope I have, that there tends to be supported levels that were support before. This is not a coincidence. Okay, everybody? It's not a coincidence that there was resistance at former resistance levels and there was support at other let me say that again. It's not a coincidence that there was resistance at a price level that was resistance before. It's not a coincidence that there was support at a price level that was support before. All right. If you want to understand trading, you got to understand that there are some price levels that are just more important than others. That's how it is. I've been doing this for, I don't know, a long time, 20, 30 years. I mean, look at this price level here, 17, right? It was resistance, it became support. Now this is psychology as well. Why would a level that was resistance convert into support? Well, this is a different form of seller's remorse. It's manifested in a different way. Okay, people sell. They're like, the price went lower. I'm a genius. I'm the new Steve Cohen. The new Mario Gabelli. I'm the new Jesse Livermore. But eventually, the price rallies, and a lot of the people that sold experience seller's remorse, and they say, if this gets back to my price and I can buy my shares back at the same price I sold them at, I will. So remorseful sellers from here, placing buy orders here, converts resistance into support. This is a different manifestation, but it's the same principles. Remorseful sellers from here, placing buy orders here, can create support. Now, next up, what was support becomes resistance. This is the opposite. This is buyer's remorse. It's the same thing we saw up here. Man, this Carnival Corporation, I thought it was called Carnival Cruise Lines, but man, it's so nice up here in Connecticut. So I feel so sorry for those people down in Florida. Like here, it's beautiful, it's cool, the leaves are changing. All right, anyway, shut up, Mark. Get back into it. So here, resistance can become support. So seller's remorse. People sell when the price goes higher. They're like, I made a mistake. I'm going to buy my shares back. If I can get them at the same price I sold them at. So remorseful sellers from here, placing buy orders over here, turn resistance into support. Now, here is buyer's remorse manifested in a different way. People buy here, price goes lower. They're like, at first they thought they were the geniuses, but then the price goes lower. And they say, if it ever gets back to my price and I get out of break even, I'm going to. So people that bought trying to get out at break even, if there's enough of these remorseful buyers, they can turn support into resistance. I mean, look at this chart, everyone. I think one of the biggest problems that a lot of newbies into the market have, and actually it's not only even newbies, it's just people who have been doing this for a long time. They overthink it. They think it's rocket science and chess. And for some people it is, but it doesn't have to be. And that's my experience. This chart here in Carnival Corporation, I'm so used to saying Carnival Cruise Lines. Meanwhile, I don't like going on cruises. All you do is eat and get fat. I mean, I'm fat enough as it is, but whatever. We'll talk about that at a different time. But this is a good example, right? All right, now let's go just take a quick look here, quick gander through the broader markets. And you can see the same principles on various markets, right? Because when we look at a stock or a crypto or a bond or a commodity, it doesn't matter what people trade. When you look at a chart, you are looking at a graphical illustration of the psychology of the people that do the trading. And whether you're trading Carnival, what is it called? Carnival Corporation? Carnival, whatever. To me, it was Carnival Cruises. Or you're trading Bitcoin or you're trading oil. It's the same thing. You're seeing the people that do the trading experience the same emotions. I mean, look at this, right? You don't need to be a chart guru to see this. Here we are looking at SPY, and guess what? The level that was resistance became support. Let's take a quick look at oil here. I think oil had a big move down today, and I think that this is probably because of the hurricane, but I'm not so sure. Maybe it's just some kind of profit taking. But now here we are in the oil market. Lo and behold, the same stuff we saw. The level that was support becomes resistance. Oil keeps going down. I think the level that was resistance becomes support again. My guess is it gets there. Oil gets down to around 72. Then we're going to talk about some trading ideas. And don't let me confuse you, because I don't want to confuse you, but make sure you come back, because there's going to be some ways where I can explain, like, this is what I'm doing. And I'm not perfect, okay? A big part of trading is understanding that even the best traders in the world take losses, just like the best basketball teams or what have you, or football teams Don't have every play. Look at that. All right. All right. All right, Mark, shut up and go back into this. Look at that. All right. It's not a coincidence that this is where oil hit resistance. I mean, look, you don't need to be a chart guru to see this. It was this level was resistance here. Now it's resistance again. This level was support here. It became resistance here. Levels, 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 levels. All right, everybody. I hope I'm not boring you, but making money isn't boring. And yeah, let's make sure we check back in. And if you know anyone down there, man, tell them to get the hell out if they can. I have a feeling this is going to be. I'm in the New York area, and Hurricane Sandy was a category 1. They're saying this is going to be a category 4 or 5. So it's going to get ugly, everybody. And, whatever, God forbid. It's a terrible thing. All right. Thanks, everyone. Thanks to you for tuning in. I'll talk to you tomorrow.